Friends, my name is Bhaumik Goda. I welcome all of you to this edition of Tech Gurukul. As part of this edition, I propose to take you through the new TCS requirement which are now applicable on sale of goods. The provisions are applicable from 1st October 2020. As part of this new levy or as part of this new law, seller is required to collect tax from the buyer at the rate of 0.075%, assuming buyer has a permanent account number, if the aggregate value of sales to the buyer exceeds 50 lakhs of rupees. Now friends, this requirement is largely similar to TDS requirement, except for the fact that in this case, seller will collect the tax. As a corollary, buyer will get credit for the taxes which seller will collect. Now friends, these provisions are applicable to a buyer, and buyers is defined to mean any person who purchases the good, except for certain categories which are excluded. Law excludes certain categories which are state government, central government, local authority, or any person who is exporting the goods outside India. Similarly, law excludes or relieves the seller from TCS requirements in case if the person is importing the goods into India. The law, that is TCS provisions, is applicable to a seller if his sales in the business in the preceding years, that is to determine whether for FY say 2021 provisions of TCS are applicable or not. I need to see whether his total sales, turnover or gross receipt in the business in earlier financial year, that is FY 1920, exceeds 10 crores of rupees. If the sales in earlier year in the business exceeds 10 crores of rupees, the provisions of TCS are applicable for FY 2021 and similar yardstick for subsequent years. Now these provisions are applicable on sale of goods. Therefore, it is incumbent for the seller to first understand or first determine whether the product which he is selling fits within the definition of goods. Now, goods is not defined within the provisions of Income Tax Act. It is defined under the Constitution. It is defined under allied laws, namely Sale of Goods Act, GST Act, or I take recourse to the famous TCS decision, which gives some kind of attributes to goods, namely that goods should be something which is of utility. It is something which a person can buy and sell. It is something which can be stored, transferred, delivered. To a brick and mortar kind of a structure, it is very easy to determine whether a particular product fits within the definition of goods or service. But for technology space, it is a question which businesses should consider. Friends, the provisions are applicable only if TDS provisions are not applicable. Therefore, if there is a sale of software which is taking place, irrespective of the fact whether that software is goods or not, if the buyer is otherwise deducting TDS on that particular consideration, TCS provisions are not applicable. In the time and the world where we live, everything is automated. Largely ERP systems would be determining what kind of person who is buying the goods from me. Therefore, it is incumbent for the businesses to understand whether my buyer is a state government, a central government, whether my limit of 50 lakhs has exceeded or it has not exceeded, and hence it is necessary that this provision would involve a multidisciplinary approaches. Even IT teams would be part of these provisions in order to get a smooth implementation. Friends, the provisions are applicable if the consideration for sale of goods exceeds 50 lakhs of rupees. On that consideration, seller is required to collect tax, that is TCS, at the rate of 0.075%. Now, first question for us is therefore whether GST is forming part of consideration or it is not forming part of consideration. In spite of popular representations, the clarifications are yet to come. In context of TDS provisions, we have CBDT circulars which have stated that GST, that is TDS, should not be levied on GST component. However, if certain precedents are taken recourse to, there are views which are possible, including the FAQs which are given by CBDT, that GST should be considered as part of consideration, and therefore businesses would have to take this view whether to levy TCS even on the GST component. Friends, the next question comes is the way in which the provisions of section 2061H are worded. As stated, provisions are applicable if sellers receives any consideration in excess of 50 lakhs of rupees. But the point of payment is receipt of consideration. Therefore, a question which one has to fathom is whether I need to pay TCS provision when I book my sales or when I receive the sale consideration. If you book the sale and apply TCS and pay the same, which is popularly called to be an accrual basis of payment of TCS, in that case there would be a easy way. In that case it would be easy to comply with the provisions of TCS. But if the view is taken that I need to pay this TCS at the time of receipt of sale consideration, your system has to give you these answers. Your system should identify and especially take a case of a buyer which has a running account with the seller, where there are numerous instances of sales and there are numerous instances of receipts of sale consideration. System should give you an answer that a particular money which is paid is knocked off against this invoice, and for this invoice I am paying the tax to the government. Practically, one would expect that tax revenue department would ask the assessee to reconcile this TCS levy with its GST return, would ask to reconcile the TCS paid along with the sales which are booked for the purpose of accounting purposes. Therefore, a considered call would be required to be taken whether the levy, that is the payment of TCS, should be aligned with books of accounts, that is accrual based, or I go and comply the law in letter and spirit and pay the TCS provision at the time of receipt of sale consideration. Another question which arises is as to what do I do with advances. That is, take a case where a buyer gave 20 lakhs of rupees as an advance at the time of ordering and paid 80 lakhs of rupees at the time of delivery. Say advance received in month 1 and delivery given in month 5. Now law requires you to pay this TCS 7th of subsequent month, similar to TDS, and in this case question arises is whether my TCS should be paid at the time of receipt of advance or at the time when I am actually booking my invoice, which is at the time of delivery. Reference if made to Sale of Goods Act, namely section 4.3. The law which is dealing with this subject, which is Sale of Goods Act, tries to distinguish a transaction where a sale can be said to taken place. The law says it is an agreement to sale only when the property and title in the goods passes to the buyer. Otherwise, it amounts to an agreement for sale. Now, if one interprets the word sale of goods in section 206 C1H, considering provisions of Sale of Goods Act in mind, then at the time of receipt of advance, there is no sale of goods. If there is no sale of goods, because it is only an agreement to sale, provisions of TCS should not be applicable at the time of receipt, but should be applicable when the goods are delivered to the buyer. In the example which we stated, it would be applicable in month 5 when the goods are delivered to the buyer, and thereafter business will have to take a call, because at that time when in month 1 advance was received, it was merely an amount. It does not partake the character of consideration for sale of goods. Now, balance view has to be taken by businesses. As I stated, provisions are widely open and some considerate calls would have to be taken. Now friends, sale return are generally a normal part of business. It is a customary in a business that some part of goods would be returned. Take a case where it is a customary part of practice that if my distributor is not able to sell certain goods, say because of expiry reasons or because the goods are not meeting a particular expectation, then goods would be returned to the seller. In this case also question arises is what do I do when a sales return takes place in a month which is different from the month when I delivered goods. This is for the reason that TCS on that sale would be paid in the month where you would have sold the goods, provided the view is that an accrual based system is to be followed. Now if such is the case, question arises is what do I do in the month 5 when the goods have returned back to me? Strictly reading again Sale of Goods Act section 24. In that case, the law is clear, that is sale of goods, that if the goods are returned, then the original sale which I made was a conditional or a contingent sale. There is no sale of goods if eventually the goods are returned back to you. Therefore, if law read very strictly, then one should not deduct tax, TCS, at the time of sales pertaining to the goods which are returned. Now, practically, to comply with this view would have a lot of onerous procedural compliance. Therefore, a practical view would have to be taken, and it is much for the buyer and seller to agree within themselves. This is for the reason that once seller collects the tax and pays to the government, buyer will get credit. Now, incidence of credit of tax to the buyer has nothing to do with his eventual purchase getting fructified. It has nothing to do when that particular buyer will sell those goods to his own customers. Therefore, if a view is taken that in any case credit would be given to the buyer, in any case the quantum of TCS is just 0.75%, in that case TCS return should not be amended. But however, if someone has to comply with law in teeth and substance, then TCS return would have to be reversed, which in turn will have other challenges. Now, as I told friends, the provisions are applicable from 1st October 2020. That is, the provision applies in between a particular financial year. Now, this opens certain transitional issues which businesses and consultants would have to grapple. The first issue is that what do I do for sales which are concluded prior to 1st October, but the consideration of which was received after 1st October. Now here, as I told, that if consideration is given to sale of goods or the provisions of section 206C1H, there are three requirements. First requirement is there should be sale of goods. Second is there has to be a seller. And third is there has to be a buyer. Now, if the law is read to mean that it is a receipt-based kind of taxation, that is irrespective of the fact whether you have sold good prior to 1st October 2020, but consideration is received after 1st October 2020, there would be some kind of retrospectivity of law which would be kicked in. And if judicial precedents, including Vatika Township, is given some regard, then in that case, it is not permissible to read the law retrospectively. And therefore, outstanding datas which are there as on 30th September 2020, TCS should not be deducted. As I told, this is one view of the matter. If taxpayer wants to act conservatively, they may well deduct or collect TCS on outstanding datas which are on 30th September and issue separate debit notes. Now, as I told, this is issue which requires clarification. Proceeding further, similar issue will arise in a case where advances are received prior to 1st October 2020, but goods are delivered after 1st October 2020. Now, as stated, in case of advance, there is no sales which takes place. It is only an agreement of sale. Therefore, all the requirement of section 206C1H, namely sale of goods, existence of seller, existence of buyer, all of them are complied with. So, in respect of advance which are received prior to 1st October 2020, in respect of which the delivery is taking place after 1st October 2020, a view exists that provisions of TCS should be applicable. Similarly, another issue arises is how do I determine the limit of 50 lakhs? Now, provisions of TCS applies only if my buyer, that is sale consideration to be received from buyer, exceeds 50 lakhs of rupees. Now, what do I do? Should I consider the sales which are made prior to 1st October 2020 to determine the limit of 50 lakhs, or the clock starts afresh from 1st October 2020? Now, this is not as if that one is applying the law retrospectively. This is only for the limited purpose to determine that in respect of sales which are made after 1st October 2020, to consider or to quantify the limit of 50 lakhs, I just take into account the sales which takes place in earlier years. CBDT circulars in context of 194J, in context of 194A, even in those provisions, the law came into vogue in between the financial year. CBDT opined that events which took place prior to the applicability of law, that is from 1st April to say 1st July or 1st April to say 1st October, should be taken into account. That is, the limits should consider the earlier transaction, but the TCS, in those cases TDS provision, should be applicable only when the law is applicable. Conservatively, if one follows those CBDT circulars, then to determine the limit of 50 lakhs, all the sales which took place between 1st of April 2020 to 30th of September 2020 should be applicable. Now, as I said, the provisions of TCS are similar to provisions of TDS. Therefore, an assessee would be required to comply the law in terms of paying TCS 7th of succeeding month, filing its TCS return on quarterly basis. CBDT has also issued a notification where the new TCS forms have been notified, and therefore this would mean some kind of a compliance requirement or an additional compliance burden for businesses. As I stated, friends, there are many open issues. One would expect, one would hope that government comes out with a clarification so that an assessee who is willing to comply with the law can comply the law in the way in which the CBDT would like the assessee to comply with law. Friends, as part of a BCAS study circle, a detailed presentation is available on the link. You can click on the link and visit the presentation. Thank you very much for joining this part of Tax Gurukul.